ADQ is reportedly investing about $2 billion in Egypt, and the U.S. Federal Reserve could aggressively hike interest rates further. You're watching the Daily Brief with Forbes. I'm Ramia Faraj. UAE Sovereign Wealth Fund ADQ will reportedly invest about $2 billion in Egypt to purchase state-held stakes in some businesses. These include Commercial International Bank and Fowry for banking and payment technology services. The agreement between Abu Dhabi's holding company ADQ and Egypt includes buying about 18% of CIB, with the transaction representing about half of the overall deal. ADQ is also buying stakes in 5 companies listed on Egypt's stock market. Investcorp has acquired the Via Palo di Dono 44 property that houses a specialized UN agency office in Rome for $141.2 million. The property is one of the few buildings in Rome with LEED Platinum certification. The acquisition marks the Bahrain-based firm's second foray into Italy's real estate market. In 2021, Investcorp acquired the property serving as the Milan headquarters of luxury goods giant Kering for $81.7 million. Qatar Airways says it doesn't owe Airbus $220 million in compensation for failing to accept A350 deliveries. It says it didn't break its contract with Airbus when it refused to take 2 of the jets. Qatar Airways has been feuding with Airbus over aircraft surface paint issues. The carrier has asked for $700 million, saying the surface flaws could leave the plane vulnerable to a lightning strike. The EU Aviation Safety Agency says there's no safety issue. The U.S. Federal Reserve could aggressively hike interest rates further by more significant steps than last week's 0.25% if it's what's needed to tame inflation. Reserve officials say inflation was already surging before the Ukraine war. They say they're ready to go beyond neutral and further tighten policy if needed to achieve their goal of taming inflation and maintaining a solid job market without leading the economy into a recession. The U.S. Central Bank aims to curb the 7.9% inflation rate, its highest in 4 decades. S&P is withdrawing its credit grades on Russian entities after the EU's decision to ban firms from providing ratings to companies in the country. The withdrawal will take place before the April 15th deadline imposed by the EU. It comes after S&P suspended commercial operations in Russia. Russia's sovereign rating plummeted in recent weeks, with S&P lowering it to CC or 2 levels above default. Alibaba Group has raised its share buyback program to $25 billion from $15 billion for the second time in less than a year. It's in an attempt to shore up its stock price that was battered by China's regulatory crackdown on the country's technology giants. The share buyback program will be effective for 2 years through March 2024. Debt-ridden Chinese property developer giant Evergrande has warned investors to exercise caution. Today, a day after it announced a halt in trading, it said it would not be able to publish its 2021 audited results by the end of March, as Hong Kong's listing rules require. Evergrande says due to drastic changes in its operational environment since the second half of last year and the impact of the COVID-19 outbreak, it would not complete the audit procedures on time. Warren Buffett's Berkshire Hathaway is buying insurance firm Allegany for $11.6 billion in cash. The purchase represents a multiple of 1.26 times Allegany's book value and a 29% premium to Allegany's average stock price over the last 30 days. Berkshire says the transaction is its biggest acquisition since 2016, when it bought industrial company Precision Cast Parts for $37 billion. And that brings us to today's Forbes RealTime Billionaires ranking. Our second biggest winner today is Warren Buffett, up $2.9 billion with net wealth of $126.3 billion. Our biggest winner today is Elon Musk, up $3.7 billion with net wealth of $248.8 billion. And our third place winner is Chilean mining heiress Iris Fontbana and family, up $1.4 billion with net wealth of $24.7 billion. Check out our website and our social media for all of the latest Billionaires news. Strong product pricing helped Nike offset a hit from lower sales in China, enabling it to report better than expected quarterly profits. Nike reported total profits of $1.4 billion for the quarter ending February 28th, down 4% year on year, even as revenues rose 5% to $10.9 billion. Nike says its gross profit margin rose due to more full price sales, partly offset by elevated freight and logistics costs. I'm Ramia Faraj. This is the Daily Brief. Thanks for watching. Bye for now.